Hi, I'm Jane Coralluzzo. Thanks for joining me today. We're going to take a little time and look at retirement planning from a tax perspective. As I go through this process, please write down questions based on what you are hearing for the first time. I've had the opportunity to help my clients achieve a retirement that they can enjoy rather than one they can afford, simply by knowing the 6 parts of the tax code that use the word tax exempt. I'm able to help my clients get to the point where they are enjoying a tax exempt retirement. Would you like to be one of them? Today I'm going to challenge some financial principles we've all heard. So keep this in mind. If what you thought to be true wasn't, when would you want to know? My first question to you is this. Is it your objective to be placed in a system that guarantees you will pay the most amount of income taxes for the rest of your life, including retirement? Or do you think it might be prudent to learn how to legally pay the least amount of income taxes that you can throughout your lifetime? Let me ask you in a different way. Here's my Mount Everest. Is it your objective to have the biggest pile of money that you're accumulating while you're working and throughout your lifetime? Or would you rather have the most spendable amount of money when you go to take distributions? Because each side of this mountain has different ramifications. They don't work the same. So let me tell you what I believe. I believe that you and I have the right, as U.S. tax-paying citizens, to keep and utilize the wealth we have accumulated without interferences from the bank, Wall Street, and especially the government. So let's take a look at this from a tax perspective. This circle represents all of your wealth, what you have now and everything that you're going to accumulate the rest of your life. The IRS says we have to pay taxes one time on the money when we earn it. So once you pay your taxes, I'm going to draw this line right here. This represents your tax liability and the taxes that you've paid. How much more would you like to give to the IRS? Or let me ask it in a different way. Once you pay your taxes, how much of your wealth would you like to keep and grow forever? Most people say, I just wanted that little pie slice, and if I could get away with it, I don't want to pay anything at all. What I have learned is that traditional models go against this very principle. We have assets. Here's all our assets. Some are bigger than others, some have more. But everyone has assets and they want them to grow and accumulate. These assets can be different things. They can be government-sponsored plans, IRAs, 401ks, 403bs, SEPs. You could have a brokerage account including stocks and mutual funds. You could have an inheritance. You could have your home. You could have autos. You could have rental real estate. Everybody has assets. And again, some of them might be larger than others. Some may have more. But everybody wants them to grow. Interestingly enough, as we reach retirement age, we start to find out there are interferences out there in the world that we may or may not be aware of. We're going to recognize them as these triangles. These interferences are born from these very assets. Believe it or not, IRS does not treat these assets tax-wise the same. Taxation on your government plan is different than taxation on your rental real estate and different than what's in your brokerage accounts. Did you realize that? So depending on what interferences we have will affect what's going to happen to these assets. So let's talk about them for a minute. One of them might be Social Security tax on your Social Security benefit. Did you know if one of these boxes over here gets too big, the IRS has the right to come in at retirement and tax your Social Security benefit? And if the asset's big enough, the tax on the Social Security benefit of a husband and wife might result in giving back $250,000 to the IRS just on that benefit. Were you aware of that? How does that make you feel? Could also have a Medicare penalty. It's treated the same way. If one of these assets is too big, you're going to pay a penalty for your Medicare benefit. And what does that mean? It means that you're going to pay the most while your neighbor next door might be paying the least, all because you were successful on this side. Did you know that it worked that way? In retirement, we might have long-term care issues. Now, women are especially concerned if long-term care issues occur and their husbands have passed away. Now, who's going to take care of them in their later years? A bigger interference is income tax. Do you think income taxes are going to go up, down, or stay the same? Remember, our government just incurred debt of trillions of dollars to fight a pandemic. Question is, when are they going to want to be paid back? What rate are they going to want to be paid? And how much of it is going to come from you and from me? We don't know when taxes are going up, but most people agree they're going to go up, and they might go way, way, way up and away, right? Another one is market risk. Who made the rule that every 10 years somebody has to give up 30% of their retirement funds because of a correction? Do you think the stock market will be volatile at some point in your retirement life? These are problems and questions we don't know. Some we do know, but a lot are born out of these assets. Here's what the IRS has allowed for 107 years. IRS has allowed for you to put an asset inside this circle and have it grow forever, never to be taxed again. Traditional planning that I was taught at an early age said that if a problem arises, let's get rid of that problem as soon as we can. And sometimes that means earmarking an asset to do just that, like cash. Cash is a great asset, right? Everybody likes cash. Well, if that asset, cash, is used to solve this long-term care problem, it either might resolve it or might only resolve a part of it. But either way, you're now diminishing what's in this cash account, correct? So we're going to shadow and say that part of that cash is missing now. It certainly diminishes the asset or reduces it. Is that what you really wanted? What if we could put the asset inside the circle, and by doing so, we got to keep it and grow it forever? The circle just keeps getting bigger and bigger. And at the same time, we got rid of the problem called long-term care. What if the more assets that we put in the circle, the more of these problems that disappeared, including taxes, market risk, never to be seen again? Because once these assets are inside the circle, the Internal Revenue Codes say they are protected, they're guaranteed never to go backwards, and upon retirement, you can take distributions out of this circle tax exempt. Now, what does tax exempt mean? It means they don't exist. They don't show up on your IRS individual tax return, Form 1040. They do exist in your circle that you control, that you own, and you decide what you want to come out of the circle. These distributions can never affect your Social Security or your Medicare premiums. They will last your lifetime and beyond. Did you know something like this existed? Well, I work with a group of professionals from across the country. There are about 50 of us. Some are CPAs like myself, some are attorneys, some are high-end financial advisors with millions of dollars under management. They are sharp people. And together we focus solely on the circle. And the way we focus on that circle is by taking a look at individual assets and the implications of those assets and how they affect your cash flow at retirement. Once you understand the implications of the choices you've already made, and you decide or discover that these assets might be causing some of these interferences or problems, you have the option of putting them right in your circle. And guess what? Once you do that, your problems disappear. Now, you're certainly going to want to know what the circle is, and you're going to know how it works, right? Here's the answer. It depends on your assets. The IRS allows several ways that this circle can be obtained. Once we hear the implication of your assets and your choices and how they affect your retirement, we can then determine which option is best for you. Let's go back to my opening question. Is it your desire to be placed in a system where you're guaranteed to pay the most income taxes for the rest of your life? Or would you like to learn how to legally pay the least amount of income taxes for the rest of your life? My second question is it your desire to have a large pot of money, or would you rather have the most spendable money you can during your retirement? Which one is the right answer for you? I can tell you right now that the most spendable amount is going to come out of this circle. Percentage is higher than anything that appears on your statement. When we go through these processes and these strategies, there's lots of questions, and we love questions. If you're concerned about the ramifications of your boxes called assets, if you're curious how this works, that's a conversation that starts right here. The implications of what you've already chosen to do and how it's going to affect how much you're going to get to spend in retirement. My last thought is it your intention to have the Internal Revenue Service be the primary beneficiary of your 40 years of hard-earned work? I say no way. I appreciate you taking the time to be educated, and I look forward to your opinion. This is my contact information, and I look forward to hearing from you. Thank you very much. Jane Coralluzzo. Have a great day.